So you just had a baby, you haven't slept in weeks, and you're behind on everything. But somewhere in the back of your mind, you know you should probably get life insurance, but you don't know where to start. I'm gonna make this simple. By the end of this video, you should know what to do in the next week. I want you to picture this. Next week, you die. Your spouse is left with a newborn. What do they need the money for in the next coming days? Well, first off, funeral costs. Funerals can be between 10 to 15,000. Second, could be mortgage and bills. Main one is probably going to be childcare though. The childcare is going to help with the grieving and with going back to work. Your spouse will have a hard time making the same amount of money that they used to make before you were gone, because now they have increased responsibilities at home, which means reduced hours at work and maybe even a career change. So what we need to find out is the actual amount of money that your family's going to need to stop their life from collapsing from the very moment that you're gone. So if I was in your shoes, this is how I would calculate how much money you would need. First off, take your annual income, multiply it by 10 or 12, okay? That's the first thing. Second thing, I would add any mortgage that's outstanding. So if you have $250,000 on your mortgage, I would add that to your number as well. Next, I would add future childcare. So childcare per child can cost anywhere from $15,000 to $20,000 per year. If you have two children, it could be up to $40,000 per year. So I would just add that and multiply it by however many years until your youngest child enters elementary school. After that, they'll be going to school. Childcare costs can be a lot less. And then you can even add a college amount in there. So you could add 50,000, 100,000, or even 200,000, but add something that you find reasonable for college for your child as well. Now that you've added all of those together, you can now subtract any savings that you have from that number. And whatever is left is what's going to be needed for coverage. So the next thing that you need to find out is time. How long do you want this policy to be active for? If you have a newborn and you want your child to be covered until age 20, then I would get a 20-year term. If you want it for even longer than that, you could go with a 30-year term, or you could also do a 10-year term. That is a lot less, but if your child is older, that can make sense. So let's do a quick example. You're 30 years old, your annual income is about $100,000. You have one infant, your mortgage is about $250,000, and maybe you have about $30,000 in savings. Your coverage amount should be anywhere between 1.2 million to 1.5 million. That's a reasonable range for what you need. So here's what I want you to do this week. First off, if both parents are healthy, under 40, get $1 million in coverage with a 20-year term. It should be pretty easy. You should be able to get it done within the week. And then once you get the coverage, you can finally just move on with it. You don't have to worry about it again. If one parent has a pre-existing condition, start with the healthy parent this week. Then bring the other parent through a broker who can take a look at that condition and find the right company that's going to allow coverage for that condition. If you get even one denial on your life insurance, it is possible it'll follow you with other companies as well, and that might make it harder for you to actually get coverage. If you're tight on cash, get a smaller policy this week. $250,000 to $500,000 is better than nothing. And you can always get more coverage later. You just can't buy insurability later. If postpartum complications happen, wait about 90 days for things to normalize. In the meantime, you can always get a 12-month accidental death policy if you're really wanting to make sure nothing happens during that time frame. But then afterwards, you should apply for a full policy. Now, if both parents work, both parents need policies. Now, if one parent works and one parent stays at home, both parents need policies. This is probably one of the biggest mistakes you can do, is covering only the breadwinner. The parent that stays at home saves you a lot of money, whether it's in childcare, cooking, cleaning, all that stuff. Although you may not see it actualize in money in front of you, you will feel it if that parent passes away. So the biggest mistake you can make is to insure one and not the other. The stay-at-home parent needs at least a minimum of $500,000 in coverage. So here's what you should just do today. Pull a quote from a broker, okay? Run the numbers I just gave you. And if it makes sense for your budget, then just buy it. The more you research, the more you get into analysis paralysis. You need concrete numbers. You need to actually know what's going to be available to you. So first things first, you got to talk to a broker. Reach out to them, see what they say, and then you can make your decision points from there on. Now, one thing to keep in mind is that postpartum life doesn't calm down. It only changes shape. For example, 6 months from now, you may be going back to work. A year from now, you may be busy sleep training. And then 2 years from now, you may be doing this all over again with your second child. So you're never going to be as healthy and as insurable as you are today. The longer you wait, the more the premiums increase every month. Insurability becomes more difficult. Underwriting gets harder. So you really do need to apply now. Otherwise, you just have to accept that future you is going to be paying a lot more money for a lot less coverage. So if this video helped you, please give us a like and subscribe. It will definitely help our channel grow, and I can answer more questions like this in future videos. Thank you.